because I know what I have to do to be successful. So as long as I still have, and this is challenging too, is always having that strong reason, that strong why. I know what my action items are. I know what I need to do to get to that finish line. I don't care what the finish line says. If I do what I'm supposed to do, everything is going to turn out fantastic.
Welcome to The Path to Wealth, the show about well-being, fulfillment, and financial freedom. And I'm your host, Hennche. Welcome back to The Path to Wealth. I'm your host, Hennche. Today we're joined by Bill Hamel, the founder of Collecting Real Estate and a seasoned multifamily investor with nearly 3 decades of experience. Bill began his journey in the New York Capital Region with multifamily real estate at age 21. Self-managing until 2019. Shifting from smaller properties, he now focuses on larger multifamily communities in New York, Florida, and Tennessee. Bill specializes in asset management, capital raising, and ultramarathon training, and has gained $70 million in multifamily property acquisitions. Beyond real estate, Bill has conquered marathons, Ironman, and ultramarathon competitions. Welcome to the show, Bill.
Thank you very much. I appreciate you having me. That must have been right off the new website, collectingrealestate.com.
Yeah, well, it's the easiest way to get the facts straight, no?
Thank you for that.
So what kind of mindset does it take to run an ultra marathon? I mean, to me, it sounds like the perfect match to be in real estate because it's such a long game. But maybe tell me more about the pain you go through when you run an ultra marathon.
It's body pain. What I've done 2 50-milers, and what I thought that I was going to feel was more of a mental challenge, where it was going to test me to say, are you going to finish this or not? And it wasn't. It was physical right through. I trained properly. I've been doing this type of stuff for 11, 12 years. And after 30 miles, it's just saying, all right, my body's starting to hurt. And you just deal with the pain and chunk through that race until you reach that finish line. It's no different than the marathon or the Ironman. You just get to a certain threshold and you just deal with the pain, and there's a no quit attitude. I feel like quitting every race I ever do, but I never have. And the big ones, I don't dare quit because the thought comes through my mind. I've been training for 3, 4, 5, 6 months. So I cannot throw out everything I've done in this process by quitting. It's not an option.
Do you ever incur injuries in the process of having that mindset?
No. I've been very fortunate. I started marathoning and I had a great degree of success starting early in my 40s, and that was relatively seamless injury-wise. Same thing with Ironman. And no differently for the ultramarathon, other than once I get past 30 miles or so, there's certain parts of my body that hurt more than others, but that's just temporary pain because you're race day, and after 2, 3, 4 days of healing up, you're back to normal, and I'm back to running, and I feel great.
I ran a half marathon once, and I think I did a great deal of just doing it with pure will, but I had like a real injury, and then I had another training which was like a physical boot camp that I went through, and again I can really take myself through it mentally, but I usually feel like if I go to that mental place, I'll break something in my body. I'm glad that hasn't occurred for you in having all of those challenges, because to me it feels like my mind can break my body.
Yeah, and I agree with you. There's different types of pain. The pain that I think I've experienced is more of aches from being so far into a long endurance race in relation to having a knee injury or an ankle injury, where if you continue to run with that type of pain, you might be really doing a disservice for yourself and destroying a part of your body. The only thing I can think of there, I'm sure some people in the audience, and you may recognize the name David Goggins. I don't think that there's too many people that can do what he does.
I think he's
where on a 100-mile ultra, after 46 miles, he fractures his ankle, and then he just muscles it out and toughs it out for the next 54. That's something I can't relate with.
See, I also don't think it's something admirable. I think it's something that's nearly psychotic.
Exactly.
Like no, I mean, it might serve you very well if you're in the Marine Corps, or, if you're a SEAL or something. That kind of attitude gets you a lot of alpha male respect. But I think it will also greatly reduce your lifespan and your health span. Like, I cannot see how David Goggins will have a great physical ability in his late age, because I think he will have shredded through his joints and his bone structure in so many different ways. And then he will have all of those accolades to point back to and be like, I did this. And I'm like, yeah, you're also like kind of a frack, like.
Yeah, you're absolutely right. We can look back at, if you're a football fan and you see running backs that have been in the league for 8, 10, 12 years and carried the ball a lot, they're destined to be almost crippled, if not crippled, by the time they're 55 or 60. So yes, I agree. The human body can withstand an enormous amount, but there reaches a point where you will pay for it afterwards. And that's the way I explained it to people after, the Ironman. The Ironman's for me was almost a 13-hour day, but it was 6 months of serious training, in some cases 15, 16 hours a week. And it's more of a challenge. I don't think it's necessarily healthy at that point when you're training like that.
Yeah, there's a guy who's like really obsessed with longevity. His name is Brian Johnson, and he always keeps emphasizing how he loves exercising, but he has to limit his exercise to a certain level, because after that it's diminishing returns for the health span.
Yeah, and he sounds like an expert in the field, and he's probably dead on right. And I can say it based on my experiences that, because I've been an athlete since I was a little kid, and I've never stopped. But I know how to feel my body, and there's a point where you really feel like you're in the best shape of your life. And it's never been when I was approaching one of these Ironman or Ultramarathons. It's always been when I was doing less training. So, once you exceed, that sweet spot, I think that, yes, you are reaching the law of diminishing returns. I agree. But what's life without challenges?
That's true. So taking it back to real estate, how does that long haul mindset give you an edge in real estate? Because it's a very long game. But I mean, for one, you've played it for 30 years. You got in at 21. But I think it's really the gains are in the consistency over decades.
Yeah, and that's exactly it. I didn't know what core values were in the beginning of my career. I was 21, and I was just pushing through, building a portfolio. And once you get serious about being a business person and get into some personal development, learn about core values and business culture, things like that, I understood how valuable it was, but never seriously implemented it into my business, meaning making sure I'm employing people that have similar values, et cetera, et cetera. But so many years in, you realize the value of core values. They are what they are. They're the core of you and your business. And 4 or 5 years ago, it came to a conclusion where my core values, I think, are a little broad based, but to your point, it was commitment, consistency, and discipline. I could not have been a in the trench, so to speak, property manager of my portfolio for almost 30 years where I didn't have commitment, consistency, and discipline. It is ultimately necessary. And you see how many people have been doing multifamily real estate investing for that long a time without having that type of core value set.
Yeah, it's definitely not a get-rich scheme, especially now when interest rates and the market and cap rates have shifted to a more normal market again.
Well, that's it. That's it. It's part of the game. Whether it be endurance racing or whether it be real estate investing, we deal with trials and tribulations along the way. And ultimately understanding that once we get past small challenges, most of the time we are making good progress. We plateau, we go down a little bit, and then the progress happens. It's almost like the real estate curve, appreciation curve over the years. It's the same chart as an endurance racer. The one point I have to make based on what you said was, we are in this high interest rate environment. 95% of my career, interest rates were between 5.5% and 7%. This is a blip. From 2019, 2020, we had 3.5 interest. That's a blip. We're not going to see that ever again unless we have another international or worldly emergency.
Yeah, I don't even think 5 is high. 5 is just high in perspective to the last decade. Like 5 relative to the last 70 years is pretty average.
No, 5. We used to jump up and down for 5. 6 was, I would say,
but
6.
I find this so interesting.
6 to 6.5, I would say, was the average along the way, without getting scientific with it. But 5. We'd all love 5 at this point. I don't think we'll ever see 5. Maybe we'll, it's not going to go less than 5 again. Just my opinion.
Yeah. So coming from New York, which is, for many investors, it's kind of a red tape state. What made you venture into more southern states?
Well, once I reflected after 27, 28 years of being a hands-on property manager, I needed a change. And part of that change was, I've been doing this so long, I want to take the plunge into buying larger apartment complexes. I'm going to start buying 100, 200 unit apartment complexes. And that was my ultimate goal to do that. But New York State has gotten much different since 2016. And I was able to absorb that year by year leading up to 2019, 2020. But this career pivot of mine also allowed me to diversify into southern states. Not only because they're much more business friendly, much more landlord friendly, but I'm in the point of my career where building a portfolio in some Florida markets is not only lucrative because of the markets, but I'm also traveling to these areas to not only see my portfolio, to see my partners, to see a lot of the people that I've been able to establish relationships with. I'm going to Tampa on Friday. I'll go once in January, once in February, once in March. It's freezing in New York in those months. I get to go down, check out my portfolio, see a lot of people that are great friends of mine, and Florida is probably going to be 70 degrees.
Yeah, I can relate to that.
I'm not going to, one of my next markets is not going to be Alaska. I can tell you that much.
Which cities are you in
I'm in
Florida?
Pinellas County, right outside
Besides
Tampa. So it's basically right outside
Okay.
St. Petersburg, Clearwater.
Yeah.
I had a property, and also Knoxville, Tennessee, and Gainesville, Florida.
Interesting. Yeah, we just did a tour in April, and part of what we looked at was Tampa, St. Pete, Clearwater. Um, we also have some units in just outside of Nashville. So interesting. I was very surprised at how Tennessee kind of thrived. Almost a little bit scary. Nashville almost feels overbuilt a little bit right now. But yeah, let's see. How do you feel about Florida? I mean, the net migration from New York State to Florida has been one of the highest over the last couple of years. At the same time, the market has different strains. Like the Tampa area itself has insurance issues. How do you mitigate that with your property?
Well, the properties that we've owned, we fortunately bought right, where those higher insurance rate we have to absorb. You shop it as good as you can,
Yeah.
but as most people, or a lot of people know in the Florida market, that in some cases insurance doubled. New
Yeah.
properties.
Well, in some cases, certain properties got almost uninsurable, like where people weren't able to even go shopping.
Yeah, which is fortunately we didn't deal with that. We just dealt with high rates on the buildings that we did own, and a 50 unit that we just purchased back in August. We were able to underwrite it based on the higher rate, and we also underwrote it
Yeah.
conservatively, where we have pretty heavy increases on insurance costs going forward, not knowing if this trend will continue. The properties that we currently own, fortunately, like I said, we bought them right, and we absorbed the higher rate, and we're still profitable.
Nice. So what made the change for you? You seem to have had a major mindset shift from I'm an operator to I'm a large scale multifamily owner. I'm not the guy, who's jumping on the rooftops trying to fix the leaks but who actually wants to be the business owner. What happened there between 2017, 19 in that period? What was the seed in your head?
Probably back in 2011, 2012 when I started working on this after a Tony Robbins event. Become an owner of your business. Don't be an operator of your business. And I looked at being an operator of my business like a badge of honor. It's funny because we talked about this before the episode. Working hard. I was so proud of myself working so hard every day. And unfortunately, I learned so late
I can feel
where
you, Bill. Like,
that was completely the wrong mindset. So going from operator to owner was something that I put a lot of effort in my property management business in 2012 right up to 2017, creating an operations manual, systems, procedures that my employees could follow. But I created such a bad habit and created such a bad routine being so involved, I could never allow myself to escape. As dumb as that sounds, being such a creature of habit. But the Tony Robbins event leading up to not being successful to extract myself out of the daily operations basically just led to burnout. After 27, 28 years, it hit me like a ton of bricks one evening where I had to make a change. I was done being a hands-on property manager of our portfolio. At that point, we sold a lot of our smaller buildings and allowed me to make two great decisions. Diversify down south, keep larger properties in the New York area that have served us really, really well, but also get out of the property management business, at least for the short term. So we have hired third-party property managers, but after the trials and tribulations through that process, we have vertically integrated back into property management. But I've learned it's clear at this point from an owner asset manager standpoint that the property manager that we've hired is running the show. We speak formally once a week, but she knows where to find me on a daily basis with any questions or anything substantive that needs to be handled. But the situation is we have a very competent, very capable property manager that's running the business.
Yeah. And I think you and me are kind of cut from the same wood in that regard. Like I come from a family where hard work is the currency, and it took me like probably around same as you, 15 years to understand that hard work itself doesn't get, it can
I'm
only
not
get
the
you
only
that
one.
far.
You made the
what
same
gets you-
mistake.
yeah. It's actually interesting. I'm kind of rolling that up with my habits right now, where I'm like, I have to remind myself when I do tasks that I feel like I'm rewarding myself by doing something that doesn't really move the needle. It's like not urgent. It's just something hard, or it's something where, just like you said, the badge of honor kind of thing, where I'm like, okay, I'm not doing this for the business. I'm doing this for my habits, like.
Yeah, I'm to the point now where now I'm obsessed with what I have going on. I'm trying to get away from the to-do list, because we all know what to-do lists can be, where you're just doing a bunch of mundane tasks that mean nothing in the grand scheme of things. But I'm using a project management software where we're able to live out of, so other people on the team are assigned tasks. They're part of the software. They see what's going on, and all the tasks are basically up to them. I'm just creating the plan. And that is my focus every day, staring at what I have in front of me and saying, are all these tasks that I'm looking at associated with marketing to raise capital or asset management? If not, I need to extract those items and assign them to other people if possible, because I have to stay focused on two things: marketing and asset management.
Yeah, I think this is really important that we kind of dissect this for us like that, and I also love that 4-box metric, where you have like important things that have to get done and urgent things to get done, and that really puts things into perspective. There's so much urgent stuff that's not important, that's to be delegated, like, and then you should kind of keep it clear. And then there's also this one thing I learned is being overscheduled kills creativity and kills space in which you can make deals where there's opportunity. Like yesterday, it was really funny. For some reason, I felt that if I keep a certain window in my day clear, that will be good. And I didn't know why. But then what happened is one of the buyers just coincidentally came by, and we sat down for 2 hours and had like the conversation that was needed to move the needle. And that wouldn't have happened if I would have overscheduled myself. So it's a little bit of a dance there, where you want enough on your schedule to be structured well, and you want to have the discipline to kind of put things where they belong so that somebody else can work on them, and then take on the load on what's really important.
No, absolutely. You have to leave a window of time open every day, because what moves our needle in the real estate investing business? When something comes out of nowhere that you have to jump on immediately. So you have to have the time to do that, because in this business, if you don't drop everything, well, we don't have to drop everything. We have a nice window of time that we can react to a business opportunity, because if we don't react to a business opportunity in a timely manner, somebody else will.
Yeah, I find it really interesting how that goes. Like the timeliness of certain things. I think most people don't understand how much it costs them to be untimely with things, or having a slight lack of urgency in their movement. And I'm guilty of that. Like there's so much opportunity cost that I probably already compounded over the years by not having a better sense of urgency when it counted.
Yeah, and certain things like that just come to mind throughout the day. If an investor contacts you, or one of my partners contacts me, or something tangible to my properties, or the asset management, or raising capital, those items, I drop everything I'm doing to handle those, because what's more important to me than my investor's question that minute? I raise capital. Yeah. My investors are my lifeblood at this point. I drop everything to communicate with my investors, because that's the needle moving item. We never know what that next deal looks like. When it comes across, we make that deal. Who are the next people we're talking to? Our investors.
Yeah. What do you consider best practices for yourself? I mean, you've probably also participated in deals. You've structured deals yourself. You have your own investor base that you communicate with. What's best practice for you?
Well, at this point, I've been able to structure it. When we first started raising capital, I hear this so much. It's okay, I'm raising capital. What's my database look like? So my database was the contacts in my phone. And I just went off raising capital that way. Did what I had to do, but it was a learning experience for sure. And I've got into masterminds and mentorship groups to find the easiest way to do these things. I learned to do that at this point because getting into real estate at 21, I reinvented the wheel. I didn't look for the best ways to do things. I created my way of doing things. So now it's, okay, I'm a capital raiser. What's the easiest, most effective way to raise capital? So at that point, it's creating a functional CRM, communicating with your investors on a weekly basis, nurturing new prospects into our database, so we're able to develop this know, like, and trust relationship.
Definitely. Was it hard for you to get comfortable raising capital, or did you feel very confident based on your own track record of managing your own properties that you had the necessary experience taking in other people's money to manage it successfully?
You can see me smile, and I took it for granted, where I approached capital raising immediately saying, I've been doing this for so long. Locally, I'm well known locally in the real estate investing world, and I've been fairly successful. And I would contact all the people that are business acquaintances, friends, family, and basically have a discussion with them. As you know, I've been a real estate investor for a long period of time, but now I am buying larger opportunities, and I'm looking to share these opportunities with others such as you. And I thought that people would just line up to invest in my deals based on my track record and my credibility.
That's what we all think, right?
And that's not how it works.
Yeah.
That was a huge learning experience for me. I had to do it the most effective way, no differently than anybody else. It is, yes, the credibility and the track record works very, very well for me. It's a beautiful foundation. But you can't just call somebody that you haven't talked to in a year and say, "Hey, it's Bill. I know that you know that I've done good in real estate. I've got this deal I'm raising money for. You got $100,000." They're like, "What?" So it's no different for anybody. It's creating that database, creating a competency, a foundation that they know you know what you're doing. But then it's the nurturing process. There's no shortcut to it.
It's an ultramarathon.
Yeah, I've done stuff with that. And then I'm doing that now where it's just like, after you do one correlation from real estate investing and endurance running, you start coming up with all sorts of correlations where it seems like endurance running and real estate investing run parallel with each other. The correlations are endless.
It seems maybe Airbnb, hosting Airbnb is the sprint.
Yeah, exactly.
And like other
and I can see that too, because
that's the market.
Airbnb, you're making quick money and you're in and out quick. It seems so much more enjoyable as I ponder this, not being a short-term rental guy, where an endurance running is so painful and long-term investing can be painful also. But the rewards are amazing. I have zero regrets. No matter how I've done it, real estate investing has created a beautiful life for myself and my wife.
And I think that's really all that counts. Like getting to a point in your life where you can genuinely say that, and be like, there's always less or more going around, but whatever we've done here has been a beautiful journey altogether, and it's gotten us to a place where we're very happy. And I think this is, to me, this is more admirable than somebody who's, I don't know, build a multi-billion-dollar portfolio out of some desire that they haven't explored, and they're just looking for the next big hit. But this whole part of enjoying the journey hasn't been there.
Yeah, and I get what you're saying, and I'm guilty of that as well. Just not being conscious of enjoying the journey. I was originally, I read that first book, saw what real estate's potential offered, and I wanted that. So the whole idea was to build this portfolio so I can become wealthy. The problem with that is you're going through the process to get to that finish line. And as we've learned, we hit the finish line and then we say, okay, what's next? And then really start understanding it's all about the process and enjoying the process. But that's extremely challenging, at least for me. At least for me, to the point where over the past year, I think I'm on my second year, where people always ask us, all right, what are your goals? It's goal season, it's the new year, or whatever the case may be. And I'm to the point now where I don't have any goals. I'm detaching myself from that finish line because I know what I have to do to be successful. So as long as I still have, and this is challenging too, is always having that strong reason, that strong why, I know what my action items are. I know what I need to do to get to that finish line. I don't care what the finish line says. If I do what I'm supposed to do, everything is going to turn out fantastic.
I never related to SMART goals, but I always related to directionally knowing what I have to do and kind of the consistent work that I have to do. And it's more like consistently planting seeds, having faith that having planted enough seeds, nurturing them well over a long enough time will provide fruit.
What I see a lot, which is common, and I stumbled into this on my own, was people make goals, and there's nothing attached to it. And you wonder why someone goes to the gym on January 3rd and they no longer go to the gym on January 21st because they didn't have a strong reason why they're at the gym, and they didn't even know what to do. There's no reason why, and there's no action plan. So when it comes right down to it, if you have goals and you do create an action plan, but you're creating action items that aren't realistic or are outside of your comfort zone, or half of them you're not going to get around to doing, what's the point of setting that goal because you're waffling around on the action items? And if you don't do these action items aggressively, you're not reaching the goal.
Yeah. Yeah. And then you have that, at the end of the day, a goal is something made up in our head. And then we have that, and if we miss it, we feel bad about it. And if maybe we hit it or we exceed it and we feel good about it, it's like this complete illusion that we're creating for ourselves in that very moment. And it can hit both ways. It can be like, oh my God, I wanted to do this. And actually, in a funny way, this happened to me once. I had a physical injury, which kept me from pursuing my initial goal that I wanted. There was a certain feat I wanted to do, and I couldn't get there because of my physical limitation. And there was so much mental friction around not having hit that goal. And then I realized, the only way to stop kind of suffering the situation is simply acknowledging that life happens differently than what's going on in my head, And then this is the new reality of this particular moment. And the minute I acknowledge that as the actual reality, then it's fine, and then you work from there.
That's it. That's beautiful, because part of your action item is getting healthy. You have to recover from an injury as part of your action item to reach that next goal if you have one. If we're going to continue to train with an injury, first of all, you're probably not going to hit that goal because you're not healing. And you're probably not going to hit goals afterwards because you might be continuing to injure yourself more and more. So sometimes, to your point, that action item that a lot of us definitely need from time to time is healing, taking a break, taking a vacation, spending time with your family, all that downtime which is necessary to restore ourselves, to rejuvenate that energy, to reach that goal. I know this, that was part of my burnout. It was just pound, and there's a never-ending list of things to do. I'm never going to be bored ever again. I haven't been bored in 30 years. So you're not going to finish all of your action items this week. There's things to do for the next 3 years. So we have to take time in between to relax, do certain things to rejuvenate us, restore us, so we can get back on track with a level of momentum.
What do you call a life well lived?
What do I call a life worth living?
Yeah, or well lived, worth living.
Jeez.
It's kind of same. Yeah.
All I can think of from me, a life worth living, is being a pleasure to be around. It really is. At this point, you learn so much. Money is a tool, as I hear so much at this point. But as we move through life, I want people to be excited to be in each of our presence. I just want to be a nice guy that people enjoy spending time with.
Yeah. Yeah, I think there's really something to that. Like everybody wants a world where people are nice to them. Just start being that nice guy, and naturally people will be drawn to you.
Yeah, and it's funny, we say this is a nice guy, and I feel like I've always been that person at a core, and then we go through the ups and downs of life and business, And then, like in the beginning part of being a real estate investor, it's like, all right, no more Mr. Nice Guy. I'm being taken advantage of, blah, blah, blah. And now it's all business. And then there's been times where I've taken that pivot because I thought it was necessary. And you're not nice.
It's
I
not.
wasn't nice to contractors. I wasn't nice to tenants. I wasn't nice to partners at certain points because I thought, I'm trying to figure this stuff out as I went along, and it's just so interesting that the journey that we can take ourselves on.
So, in which attitude do you think is bringing you towards long-term success? You did mention that you were playing it tough at times, and that there's different ways to be with partners and vendors, and where do you think long-term success lies?
Long-term success lies in those relationships. I'm fortunate to had in my first chapter, I guess. It's a long, long chapter, which was building a portfolio with my best friend growing up, and then building a real estate portfolio with my brother Mike. And they are two of the closest people to me. And it's been a beautiful journey with ups and downs, of course. But those two relationships have gotten us where we are now. And based on those relationships and what I learned from a lot of what we've discussed, I think that I'm a better partner with my partners in Florida and Tennessee based on what I learned from my best friend and my brother with that journey. So it comes down to the relationships that you form, and that's ultimately necessary to continue to grow the best way, the most enjoyable way for everybody.
I think that also kind of goes along with the philosophy of Warren Buffett, and he's very interested in having mutual long-term relationships, and nothing compounds at the rate of relationships. Like having real relationships, solid, genuine relationships. If you have that level of trust and you can get deals done because of that trust, and you don't have to do your due diligence on a personality, on a person, on their background all over again, and you know what you can do with them, I think that can open a completely different trajectory.
Yeah, the funny thing is, as I'm listening to your response, based on the relationships and on paper, that is exactly it. There's nothing more valuable than strong long-term relationships, but can also bite you. So you may value a relationship more than somebody else might value that. Not pointing to any of my partners, but for example, say a lender that I'm creating a relationship with, where you can go 3 years, 5 years, 10 years, and your idea is to grow together. And sometimes certain relationships don't have that dynamic. I had a what I thought was a fantastic relationship with a lender for almost 20 years. But I realized as time went by, they were all business. I was a number. I was a number, and I thought we had this relationship. And I was naive. I'm trying to create this beautiful relationship with a bank.
So this is actually an interesting one. So I've been exploring some of our old school bank relationships here. Those are relationships that my grandfather started some of those. Obviously, the people that my grandfather deal with are not in place anymore, but there is an ongoing relationship with those particular banks. And they do, it does help, but they're not as genuine as you would think.
You know what I found over the last 3 years, and I have great relationships with banks, with originators. I'm easy to do business with, or at least I think I am. But I think that the relationship is much more healthy when you're able to talk to 3 different originators and explain to them clearly that I'm interviewing 3 different banks. You guys are competing with each other, and they respect that. They seem to have no problem with that.
Yeah, I think I think that's fine. You can do that and still have
Yes.
genuine relationships, and they will understand that we're doing business. I think we don't need to go to a place where, oh, we've been doing business for whatever amount of decades, and that's why I have to come to you for new terms. I don't think that's a good space for either party. So I think there is a place where you can have multiple genuine relationship with multiple banks.
I
for
agree.
example.
If you have a really tight relationship with one bank and they know it, I think you're as investors, as consumers, the relationship will be much stronger with the three banks that you're dealing with instead of dealing with one bank, assuming that the relationship is that strong where you only need one bank.
Yeah.
That was naive.
Yeah. Well, we all learn from, like, I can certainly point to my naive moments, and there will probably be more. But that's part of the journey of life, right? Exploring. I think everybody takes a hit here and there based on what we didn't know, and we learn by trial and error and taking action, and then we course correct.
Absolutely. No, geez, if we really soul search, we could probably start, dropping all of these naive examples of mistakes that we've made, certain relationships that we've gotten into, whether it be tenancies, whether it be vendors, whether it be banks. We could go on, but as you said, that's the part of the life journey. It certainly isn't a linear chart. It's no different than our
your
real
life
estate
wasn't just
investing.
A to B
Yeah,
straight
no,
line.
exactly. Everything that we do. I don't care if it's my endurance journey. You're gonna have these ups and downs. If it's the real estate appreciation historically, same thing. I think there's a lot of parallels with a lot of things in life.
Yeah. Well, Bill, where can people connect with you, find out more about you?
Go to collectingrealestate.com. We have a Collecting Real Estate local meetup in the Albany, New York area. And my private equity company is collectingrealestate.com, raising capital for deals in New York, Florida, and Tennessee.
Nice. Well, thank you so much for your time and, sharing your life journey and experience with us, and basically 30 years, 3 decades of real estate investment.
No, I appreciate you having me on. This was fun.
Thank you for joining us at The Path to Wealth. We hope you enjoyed today's episode. Check out our upcoming guests and be sure to share it with all your friends and family that want to take their life to the next level of wealth.